Morning, Steve here in Chicago with the morning grain comments. Well, in some instances you might say it's the quiet before the storm because we've got some issues developing in the markets that should make the markets volatile and could swing them higher or lower depending upon how everything plays out. Literally there's rains in Minnesota, Iowa down into Missouri, moving east into the Midwest. Over the next 5 to 7 days the Midwest could see 1 to 3 inches of rain favoring Iowa, southern Minnesota, northern Illinois, and southern Wisconsin. Again, that really hasn't changed from yesterday. We have like 3 maps that show, starting next week, a ridge developing across the western Midwest. We have one that wants to center it over the central Midwest, and we have 2 that wants to keep it into the Rockies. So the trend for July is probably drier than what we've seen up to this point, but we really don't know about how much heat there is. So again, crop ratings are below average and a year ago, and we'll see if we can maintain that or if we slip lower, or actually walk in here next Monday and the weather is more normal than what the ensembles suggest. We also have a USDA report on Friday. Funds are short going into this weather and this report. They should show more stocks, and the key is how much acres which farmers have done. Technically, November beans are sitting at kind of a midpoint with support at 908 and resistance around 922. So we'll probably break out of those prices over the next week or so, but we don't know exactly which way we're going to go. Dees corn is about the same. You've got resistance, let's say, at 380 to 383, support at 375, a pretty tight range. But we did see overnight that open interest continues to drop in the July contract as we get closer to first notice day. And we're worried about losing export demand to South America. So corn has a lot of different things working on it at this price range. And for Minneapolis wheat, which everyone hopes will catch a bid in corn and beans, it made new contract highs yesterday. Continue to talk about lower spring wheat crops. The demand, though, is strong. Offsetting that could be a good Canada crop, and it's also starting to rain a little bit in Europe. So we'll have to see if that market has more upside potential on the breakout yesterday, or if we run into some resistance. It is interesting to note that we're starting to see some dryness in parts of the Ukraine and Russia, which also could help the wheat market. So a lot of things coming together in the next week or so, and the lean is a drier July, which could help prices. We still have too much supply in the world, which limits the upside in prices. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.